Good day, everyone. Welcome to Module 12, which is the last module of the analysis of the Nigerian tax bill. We thank our subscribers for joining us up to this moment and for supporting us. So, Module 12, impact on key stakeholders. And who are the key stakeholders? Taxpayers, tax professionals, and tax administrators. So, we'll be looking at the impact on key stakeholders. Now, the Nigerian Tax Bill 2024 introduces transformative reforms impacting three key stakeholders in the tax ecosystem: taxpayers, tax professionals, and tax administrators are the key stakeholders in the tax ecosystem. This comprehensive legislation seeks to create a modern, efficient, and equitable tax system by streamlining processes, broadening tax base, and aligning Nigeria's framework with international standards. So below is a detailed analysis of how these stakeholders are affected. So we'll be looking at impact on taxpayers, individual taxpayers, for example, where we have progressive tax system. Now, under this progressive tax system, fairness is enhanced by higher contributions from high income earners, while low income earners benefit from tax-free threshold and VAT exemptions on essential items like food and medicine. Essential items like food and medicine. So protection for vulnerable groups through tax-free threshold and VAT exemption on essential goods reduces financial burden on low-income individual. So now let's move to digital and foreign income and taxation. So taxing digital assets and income from non-resident suppliers ensures that individuals engaged in global transactions contribute fairly. So individuals engaged in global transactions contribute fairly, and then relief from double taxation promotes fairness for Nigerians earning income abroad. That is with respect to digital and foreign income taxation. So taxing digital assets and income from non-resident suppliers ensures individual taxpayers engaged in global or digital transactions are captured within the tax net. Now let's move to simplification and clarity. Consolidating tax laws provide clarity, reducing confusion and encouraging compliance. So the presumptive tax regime simplifies tax obligations for individuals with informal businesses or unclear record. Now, with respect to corporate taxpayers, so lower tax burden for small businesses. Small companies benefit from a 0% tax rate, fostering entrepreneurship and reducing compliance costs. Now, export-oriented businesses also enjoy full or partial tax exemptions in free trade zones, promoting international competitiveness. Now, incentives for key sectors. Tax holidays and deductions support growth in agriculture, health, and technology. Research and development deductions encourage innovation and long-term sustainability. Now, increased compliance obligations. Companies must adhere to stricter rules for VAT invoicing, related party transaction, and reporting. So corporation must align with stricter compliance measures such as the fiscalization of VAT invoicing and reporting requirement for related party transaction. The effective tax rate floors ensure profitability. The effective tax rate floors ensure profitable companies pay a minimum level of tax. Now, with respect to enhanced deductions, clear guidelines on allowable and non-allowable deductions prevent abuse and support legitimate business operation. Now, the impact of this is that it encourages investment and innovation while holding corporations accountable for compliance, ensuring fairness and sustainability. Now, with respect to non-resident taxpayers, there is an expanded tax obligations now. Non-resident non-residents providing digital services or with significant economic presence in Nigeria must register for VAT and remit taxes. Withholding tax simplifies compliance by treating deductions at the source as final. So withholding tax simplifies compliance by treating deduction at the source as final. So withholding tax obligations provide simplicity for non-residents as tax is deducted at the source and considered final, reducing administrative complexities. Now, impact on tax professionals. Now, impact on tax professionals: increased demand for advisory services. Now, the expanded tax base covering digital assets, non-resident suppliers, and cross-border income creates opportunities for professionals to guide individuals and businesses on compliance. Advisory services will be critical for navigating new incentives, deductions, and reliefs under the consolidated tax framework. So expertise in double taxation relief and transfer pricing will become essential as these areas grow in complexity. Now, is two is the need for specialized knowledge. Professionals must understand sector. Professionals must understand. Professionals must Need for specialized knowledge. Professionals must understand sector-specific tax rules, such as those for petroleum operations, free trade zones, and production sharing contracts. Now, familiarity with the VAT framework, including fiscalization and progressive rate changes, is also essential for assisting businesses, and proficiency in handling artificial transactions and related party dealings is critical to avoid penalties. Now, enhanced compliance services. Businesses and individuals will require assistance with meeting reporting deadlines, maintaining records, and filing claims for tax credits or deductions. Now, accurate VAT invoicing, particularly for non-resident suppliers and cross-border transactions, will be a key area for compliance services. Now, increased collaboration with authorities too is very important. Professionals will need to liaise with tax authorities for submitting claims for VAT returns, capital allowances, and incentives, and to also address disputes arising from artificial transaction adjustments. So representation during audit or compliance review will be in high demand. So the impact to tax professionals is that tax professionals will play a pivotal role in interpreting and navigating the complex provisions of the bill, enhancing compliance and ensuring efficient tax management. Now, the impact on tax administrators. Now, for tax administrators, we'll be looking at broader revenue base. Administrators gain access to new revenue streams, from VAT on digital services and cross-border transactions. They also gain new revenue streams from excise duties on telecommunications and gaming, royalties from solid minerals too, and then the gradual VAT increase and effective tax rate floors contribute to steady revenue growth. 2. Enhanced monitoring and enforcement tools. So the fiscalization of VAT invoicing ensures real-time tracking of taxable transactions, reducing fraud and revenue leakage. Now, digital compliance measures such as electronic invoicing and tagging improve tracking and enforcement efficiency. Alignment with international standards. Now, the provision for double taxation relief and non-resident supplier obligations align with global tax practices, enhancing Nigeria's reputation as a compliant jurisdiction. Transfer pricing rules prevent base erosion, ensuring fair taxation in multinational operations. Now, with respect to administrative complexity, specialized expertise will be needed to manage sector-specific rules for petroleum operations, free trade zones, and production sharing contracts. Also, increased claims for tax credits, refunds, and incentives necessitate robust audit and system. Verification system. Number five, improve collaboration with stakeholders. Tax administrators will need to engage actively with taxpayers and professionals to address compliance challenges. So, regular reviews of agreements such as production sharing contracts and double taxation treaties require collaboration with private entities and international bodies and with international bodies. So now let's look at the impact. The bill equips tax administrators with advanced tools and framework for effective enforcement, but requires investment in capacity building to handle increased complexity. So now the overall impact of this is that one, it enhances compliance. So stricter obligations for taxpayers combined with streamlined monitoring systems improve compliance and reduce evasion. Two, on revenue growth, the expanded tax base and introduction of progressive rates increases generate sustainable revenue supporting national development. Now, number three, capacity building. Both tax professionals and administrators will need to invest in training and capacity building initiatives to manage new rules effectively. Now, number four, economic equity. Progressive tax rates, VAT exemptions, and targeted incentives balance revenue generation with fairness, protecting low-income groups and small businesses. Now, global integration. Alignment with international standards foster Nigeria's competitiveness in attracting foreign investments and enhances cross-border trade facilitation. Cross-border trade facilitation. Now, in conclusion, the Nigeria Tax Bill 2024 serves as a transformative tool, reshaping the relationships between taxpayers, tax professionals, and tax administrators to create a more efficient, equitable, and modern tax ecosystem. Now, for the call to action, taxpayers need to embrace the new framework and leverage available exemptions and incentives. For tax professionals needs to build expertise in specialized areas like VAT, transfer pricing, and sector-specific rules. Now, lastly, for tax administrators, they need to invest in technology and capacity building to handle the increased complexity of the new system. Now, the bill promises long-term economic benefits, fostering compliance, boosting revenue, and ensuring fairness in Nigeria's evolving tax system. Thank you very much. We've come to the end of the analysis of Nigeria Tax Bill 2024. Thank you for joining us in this enlightening journey.